welcome to this week's edition of the Swiss Money Solution, the show providing you with more financial tools than a Swiss Army knife. I'm your host, Kristen Oakley, and I'm joined by the CEO, Jörg Eichmann from Swiss American Financial, and financial advisor and Medicare navigator, Jim Keegan. We're so glad you're joining us today. We recently did a show with all three of us talking about navigating the Medicare maze, and you all got such a huge response from that. We thought we would bring you back into this conversation and pick up where we left off. So much goodness to get into. Jörg, Jim, great to be back with both of you. How are you this week?
I'm fabulous.
Yeah, I'm great. It's good to see you again. Thank you for the last show. It was amazing.
You're welcome. Well, and your phone's been ringing off the hook of people wanting to know more, right?
Yes, and the most amazing part, just to start off with, we talked about last time how so many people call us and like, I've never heard this term. I've never heard that before. I've been with my firm, my brokerage, my advisor for 10 years, 15 years, but this is a term that I've heard the first time during your show.
Right.
So isn't it amazing if you think about it? So this is the regular tax system. Now we have also the Social Security benefit, provisional income taxation. That's its own system. And now we have a third one. Yeah. Now we have the IRMAA system where we need to figure out where all these income sources coming from. That now we have an additional penalty / tax.
Yes.
Via a Medicare premium increase. So we're going to talk about this a lot today,
yes,
I'm sure.
And we are. And I think, on the offset, sometimes it could look like it's maybe not the most thrilling subject, but let me tell you, it is so important to know because you don't want to inadvertently be paying more than you need to for your health care coverage, especially in retirement. So let's pick up with that. We're talking today about minimizing those Medicare premium surcharges, and that can happen when you trigger something known as IRMA. So define for our viewers what this term IRMA actually means.
Well, I think the first thing that I like to do is to kind of add Uncle Sam and Aunt Irma.
Okay.
Both of them want to get into your pocketbook. Uncle Sam wants taxes paid to him, and Aunt Irma wants penalties and surcharges added onto your Medicare premiums. IRMA is the income-related monthly adjusted amount that you pay for your Part B premium.
Okay.
It impacts couples and singles, and it impacts you based upon income thresholds that are set by the IRS and Social Security on an annual basis. And so for 2025, they set those schedules, and then they look back at 2023 and said, okay, if you made this amount of money, you now fit into slot 3. Instead of paying $185, paying another $87.50, it hits Part B and Part D, your people and your medications.
Okay.
And so it's got a number of slots, and the top number, the top slot's over $600 a month for your Medicare Part B premium. We run into a lot of people that didn't know that that was coming. It's a big sticker shock when they got that letter in December, of which this year there was almost 8 million letters mailed out to people saying, you're getting IRMA.
Right.
And by 2030, that number is projected to go up to 12 million annually that will be getting an IRMA surcharge tacked onto their Medicare Part B premium.
And in a lot of cases, correct me if I'm wrong, this can be prevented, right?
It can.
Absolutely.
And so we need to talk about this because, again, the way they calculate it is it's a 2-year look back. So explain to our viewers why they need to understand the critical timing of that.
Well, I think it's very critical because they're taking a look at your modified gross income is what they're doing. And so
From 2 years ago.
From 2 years ago, And so as you're looking and you're still working, as you're approaching that age of 65 and aging into Medicare, you need to understand what kind of income that you're booking at that point in time. Say somebody's working and they decide, that they're going to turn on their wife's Social Security or something happens, different things like that. All of a sudden that income gets that boost. And they don't realize what they've done to themselves until it's 2 years too late, or it's a couple years later and they hit 65 and then they get that number, so there's a number of things that you can do to help plan. You know, how are you booking your 401s? Have you done any Roth conversions? You know, Roth conversions, you know, you can get those. You pay the taxes on them now. You wait until after, you know, 5 years at that Roth window.
Right.
And then all those dollars come out tax-free, where the IRS doesn't see that. You know, turning on Social Security can have an impact on your IRMA. Taking money out of your 401s can have an impact on your IRMA.
Selling a house, right? Selling a property.
Selling a house is a great one. You know, selling a business is another one. You know, there are some things with IRMA that can be appealed. Life-changing events. You know, and so if people get an IRMA letter, you know, I encourage them to work with a professional to take a look at it and say if there's any way to appeal that and get that brought down. Because like you said, you know, you're impacting yourself going forward. And if it's a continuous IRMA charge year after year, you know, it can get very, very, very expensive over the life of a retirement.
For sure.
And I think, you know, just to add to it, almost every event that we have, and we have currently about 11 events over the next 25 days. So
doing in-person
life events,
workshops
in-person workshops,
Yes.
sometimes colleges, libraries, whatever we can do to educate, right? We want to really get financial illiteracy out of this country so that people understand what they're doing. And some of them are workshops where we go to restaurants. So we'll feed you a little bit because it's going to be drinking out of a fire hose literally for 2 hours. So we'll make sure you have enough nutrients to digest this stuff.
Exactly.
That's what I'll say. But the bottom line is at the end of these events, I would say half of the people that come up to us is really now IRMA related. So like, well, why do I pay $600 now in premiums? And we realize if we only knew this 3 months ago, because there's a time limit for those two exemptions to be actually filed. If you don't do it, you might pay up to 2 years of addition increasing Medicare premiums. So what does this really help you if your financial advisor tells you, oh, here, do this and that, sell some stock, and then we invest it here and there. Next thing you know, they're in this huge predicament where they pay a little lower tax, but with the Medicare premium increases, now they're actually having less net profit because no one thought about this in their overall income planning.
Right, yes. And again, a lot of this needs to be planned for proactively. What would you say is the ideal time for folks to start thinking through all these decisions so that they don't inadvertently trigger IRMA?
About yesterday.
I was going to say the earlier the better. You know, when you take a look at the whole retirement pathway, you know, the earlier you get into laying that path out and creating that map, you know, that gets you to the golden treasure of paying, you know, your fair share of taxes, but not too much in taxes, and not paying all these penalties.
So it's not so simple as, oh, I'll just wait till I'm 65 when I become Medicare age eligible, right?
No, not at all. You know, you take a look at it, and so, you know, you turn 65 and something happens to one of your parents or something, you get in there, and there's an IRMA tax. You know, you turn 65, you retire, you get sick leave payouts, you get vacation payouts, you get all this other stuff. Does that bump your income up to a certain level? You know, you're married and you have a spouse that dies. You know, your fixed income is 200 and now there's only one of you. Automatically, you're into IRMA.
Because you're going to be in a different tax bracket as a single filer, right?
And we had a couple clients who were heirs of farmland, and then they decided to sell it, and they sold all the machinery and the tractors, and they had a huge capital gains. But not only did they have capital gains, but also they all
2 years later, you know, after they sold all the equipment, moved out of the Midwest and came to Arizona, you know, they're enjoying the sun and fun and sun, and then all of a sudden, you know, boom. 2 years later, you know,
more often.
$600 a month for each for Part B versus you know, the 185.
I'm hearing the jaws drop just in the studio, so no doubt jaws are dropping at home, and this might be completely new information for you that we are covering today. So what would you say to someone who's watching right now and going, my gosh, I had no idea that this was a thing. I had no idea I needed to start thinking about this as far ahead as you're recommending. What would you say to someone watching who's having those questions and thoughts right now?
Well, I'd definitely say your question is just the number one important question. When should I do any of these steps? It used to be just one step. Oh, I'm going to retire. Oh, I'm going to get my
my gold watch
am I going to get?
Right?
Can I pick the label? That's no longer the case.
Where are we going out for dinner?
All you know is kind of sort of what you're going to get for Social Security, hopefully, right? That's a whole other subject. But from here on in, now you need to do your own planning, all of it. So you really need to start with a retirement plan. Folks, I can't really hammer this home often enough. You got to have a blueprint for your retirement. You got to know the direction where you're going. You have to know, what is my goal that I want to achieve in order for me to never have to worry again? You worried all your life. You got up, you had stress. Wouldn't it be nice if now you can finally, lower that heart rhythm a little bit and actually not just go through retirement, but enjoy it? And in order to do that, you can't be worried of what's going on right now in the markets, right? Or at any time. I mean, we had crazy markets in the last 2 years with, 12 up, minus 15, plus 19, minus 9. This is just absolutely crazy, especially with AI, where when DeepSeek came out, next thing you know, then the same day, some of these major AI firms lost 45, 50% in one day. Do you really want to worry for the rest of your life in retirement how that's going to go for you? When you should really focus on the important stuff, where you set everything up on autopilot. So get that retirement plan, that Swiss American Financial Retirement Plan that leads you to all the tax reports that will show you exactly what is the consequence of me withdrawing from my different asset classes. What is that going to do? What is the cause and effect of being taxed on yada, yada, yada? My 401k, 403, 457. Is there room to do maybe a Roth IRA? Right? So what Jim just said, if you lower your IRA responsibility, that means you have to take out less at age 73 or 75, depending on your age, which then might just be enough of lowering that amount so you're not ever getting close to that IRMAA spike, income-related monthly adjusted amount, that could put you over that premium that might stick with you for the rest of your life.
Jörg, Jim, thank you so much. I know we've already covered so much ground. I'm excited to continue this important conversation with you both. To our viewers at home, maybe this is new information to you. We know it can feel overwhelming. Here's the great news. It's not new to Jörg and Jim. This is what they do for clients day in and day out, and they would love to be able to do it for you as well. And so this is the invitation for you. For no cost, no charge, no obligation, we invite you to pick up the phone, call the number you see on the bottom of your screen, and schedule your time to come in and meet with them and receive your very own complimentary written financial plan that'll take a look at all of this that we're talking about today and so much more. That number to call is 855-620-2567. Or if you'd prefer to connect online, you can simply take out your smartphone, open up the camera app, click and scan that QR code that you see there down in the bottom right-hand corner of your screen. That will take you to a landing page, ask you a few short, simple questions, and then a member of the team will reach out to connect with you to schedule your complimentary meeting that way as well. Stay with us. We'll continue this important conversation when we come back.
If you're in a certain system within the industry, you are forced to invest your client's money in something that your corporate overlords essentially tell you. I'd never want to be in that position where I know the outcome's already predetermined. The minute you walk into our office, we don't work like that. We have literally clients where we say, like, you know what, everything looks great. Guess what? That gives us referrals from that client. Say, like, wow, these guys didn't try to sell us something. They actually said it all looks good. Doing the right thing, I really believe in the universal law of karma, let's say. And if you do it the right way, it might hit you in a multiplier coming back to you. I also believe in doing the wrong thing at some point. That boomerang will hit you back in the head. To me, this is the big benefit of being an independent. You don't have to force clients into certain investments. That's really what helps us do the right thing and also retain our clients, in most cases, probably for life.
Welcome back to the Swiss Money Solution. I'm Kristen Oakley, joined by both Jörg and Jim from Swiss American Financial, and a very important conversation we are having today about minimizing those Medicare premium surcharges, triggering something known as IRMAA. Of course, we have so many acronyms in this industry, right? Yes. But you did such a great job of explaining. We have Uncle Sam that's trying to get his fingers into our money. We have Aunt Irma with Medicare. Basically, the point is we don't want you to have to pay any more than you are legally required to pay. And there are ways to proactively avoid triggering this surcharge. And this is what you all do for folks when you're putting together these comprehensive financial plans, is looking for strategies and ways to remove and minimize these surcharges. So let's talk about what some of those strategies are.
Yeah, I think, when you take a look at where we are in the retirement picture, you know, where people are, there's trillions of dollars that are now sitting in 401ks. You know, people are, you know, there's 10,000 people a day turning 65. You know, there's going to be more people retired than any time in the history of the United States very shortly. They're accessing those 401s. Uncle Sam is expecting them to access and hoping they do, and don't realize, you know, what they're doing to themselves and getting IRMA surcharges. So one of the things that we first want to take a look at, and like we said earlier, starting that planning process early gives you the opportunity, you know, to take a look at certain strategies. You know, one of them is a Roth conversion strategy.
Okay.
Where you turn that pre-tax money, IRA money, into post-tax money, which comes out at a later point in time tax-free. That can help you manage and keep your income levels below the IRMA spikes, which can save you thousands and thousands of dollars per year. You know, it lowers all your future taxable earnings. You know, the conversions are done over time, so you're not exposing yourself to a lot of taxes and having to bite that big bullet. You know, as Yurik's always said, we're in one of the lowest tax environments that our country's ever been in.
Yes, the third lowest brackets we've had in the history of the United States.
You know, so you know, are you prepared to take advantage of those tax discounts that are currently out there? Because I'm sure, you know, there's not too many people in the audience, you know, right now that are assuming taxes are going to go down in the future.
Right.
You know, and so how do you want to make sure that you do it? You know, and like I said, managing your future income streams from all the different asset classes that you might have to help support your retirement is very crucial to make sure you're minimizing your taxes and avoiding Medicare IRMA spikes.
Right. Yes. So much goes into this. A couple things I want to pull out that you said. This requires strategy. It requires planning, and it requires a systematic approach, because the worst thing could be if someone tried to do this on their own, for example, a Roth conversion. Let's say they think, okay, I'm going to convert this whole thing in 1 year. Oh, gosh, that could trigger some really negative, right?
Don't try this at home method.
Correct, So
And we've seen some places where a person says, well, my advisor says, you know, I have this $1 million in this 401 that I should convert it. That's a big bite. That's a bite that you don't want to do. That's where the strategy comes into play, the comprehensive review, and putting that path together.
So when you're building these plans and walking through these strategies, let's say someone's watching right now. I know you've had this case where a lot of folks have watched the show, they've called, they've come in to sit down with you. Maybe IRMA is one of their biggest concerns. How do you then go about putting together the plan and figuring out, you know, what strategy and what order and what would be right for them? Because no two plans you build are alike.
That's a question every client should ask when they come to our office, actually, because the bottom line is that you cannot make those decisions without, again, having that retirement plan in front of you where you have a direction, right? They say there's a million ways to get to Rome, but as long as you know you're going to end up in Rome, you're okay. But if you don't know where you're going, just like, let's just go east and west, you know you need to go south, that's not going to work. It's very similar in a retirement planning community. Those who plan correctly, they know all the actual effects all of their income streams are going to have. And that's the first thing you need to know in order to find out, does this actually make sense for me to do Roth IRA conversions? I would say about 30% of the population has the opportunity, or at least the prospects and new clients that we're seeing in our office have the actual opportunity to do this. I would say more often than not, we're telling them, well, you'd have to live to age 91 before you reach that threshold where the pre-taxes that you're paying now at a higher level are going to make sense for you at age 91. And from there on in, you get small savings. The ideal really is to do this early enough where in your mid to late 70s, you're already starting to benefit from the fact that you paid a little bit more here. So in other words, your asset falls a little below what the average line would be if it's still all pre-tax. But then at some point, because so much of it is now after tax and growing tax-free and distributed tax-free, without penalties, without RMDs, that could have a penalty too if you don't take it on time.
Sure, yeah.
It used
an
to be
additional
50%.
Yep, additional 25% now.
It's only 20.
I know, right?
Isn't
How
that
nice of them.
The government said, look, the older you get, the more time you have, so you can keep things in your head easier. So you should be penalized if you forget to take that money out. Isn't that just absolutely brutal? Who comes up with this stuff? I always ask.
I know. I'd like to meet the clown in Washington who came up with half these rules, right?
Yes, exactly. And that's really what clients see during our presentations when we do those life events, when they realize, hold on a second, what, that's taxed too? What, they're taking non-taxable interest to figure out how much I'm going to pay for Social Security benefit taxation? Isn't that an outrage? The word itself says non-taxable interest. Well, hello.
They even take how much you're receiving from Social Security to determine how much they're going to tax your Social Security.
Well, luckily, they're only taking 50%. And I think we showed a graph in one of our other shows where it shows that 65% of the American population is never going to pay into the federal tax system. Because if you only have Social Security benefits, they take only 50% of that for the calculation of the provisional income taxation. I know, folks, it's overwhelming. But like Kristen said so many times before, we do this for a living. This is our daily bread and butter. Right. Jim and I do this for 5 to 10 clients every single day. We want to show you and understand the concept of what it takes to really guide you, take you by the hand, and start with a nice retirement plan. Then get you into what we call the tax clarity software tax plan that shows you how much of your Social Security benefit is taxed. Then we use another software that's one of the most phenomenal software. It's not, I don't take credit for it, we just license it. And that is connected to the CPA Network of America, and they return your tax returns that we upload and give you actual recommendations. Your CPA does not give you recommendations usually. They just file and show you the mistakes you made last year, right? We do tax planning. They do tax filing. It's a very big difference. We addressed that in one of our other shows as well, for those who've seen that before. But the bottom line is you really need to start from scratch. If you don't have a real retirement plan that shows you what it's going to look like to age 100, taxable revenue, taxable income, how is it going to affect my Social Security benefits, and is that going to affect my Medicare premiums in the future?
Yes, Jurg, Jim, thank you so much. It's such a wealth of information each and every week, and we hope that you are finding this to be helpful and valuable as well. Again, you don't have to go this alone, and why wouldn't you want this? This is a comprehensive, holistic financial plan that will be built for you and your individual situation, and you can get yours for free, no strings attached. So we encourage you to reach out today. That number to call to claim yours is 855-620-2567, or again, you're welcome to scan that QR code, and that will get you connected as well. We'll be back with more solutions regarding this problem right after this.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter, the one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to the Swiss Money Solution. I'm Kristen Oakley, joined by both Jurg and Jim from Swiss American Financial, and a very informative conversation we are having today, helping you understand how to minimize those potential Medicare premium surcharges that so many folks are unaware of, which can cost you thousands over your lifetime. We want to help protect folks from running into that. So what are some of the other strategies? I know before the break we were talking a lot about Roth conversions and how you're able to systematically walk your clients through that. What other strategies are available that you employ for your clients?
Yeah, that's a great topic to bring up, because I think there's a number of other tools that are in the tool belt that we can do to help make sure people are managing their modified gross income and that timing of your Social Security benefits. You know, and that's a great time to be reviewing if Roth conversion options are an option that you should be taking a look at. You know, strategic asset allocation. You know, is it tax advantaged, or is it a taxable account? You know, so if you're still working, instead of putting in that 401k IRA, talk to your employer about a 401k 401k Roth plan.
Right, a lot of employers are offering those now.
They are, and so we're getting your money, paying a little bit of taxes, take a little bit of pain, softens a lot of pain at a later point in time.
Right.
If you're right now in the current market that we're in, some people might be realizing some losses in their brokerage accounts. Hopefully not, but if they're doing the right management for those accounts, but if they are realizing losses, they can do some tax harvesting and help bring their modified gross income down. Charitable giving is a way to bring different things down.
And you work with a lot of folks who are charitably inclined, right?
Yep, exactly. And I think that the point you made about Social Security benefits, if you didn't start it yet, you definitely want to come see us. You want to make sure that before you trigger that income, you want to make sure that maybe there isn't an opportunity for a year or two where you draw some money from after-tax sources, so you don't have that extra $1 turning into $1.85 of taxable income, because folks, up to 85% of your Social Security benefits could be taxed. You don't want that. So if you do Roth IRA conversions, ideally you do it just between retiring and starting your Social Security benefits. There's usually a year, 2 or 3 where you can benefit from that, but make sure you do this early enough. We had some occasions where we submitted it on the client's behalf, and next thing you know, on December 31st, some of these companies, because they're getting overwhelmed with these demands right now, they simply couldn't do it and didn't tell anyone, oh, sorry, your Roth IRA conversion wasn't done this year. You have to do this earlier and earlier and earlier. I remember that correctly. I couldn't sleep for 3-4 days, even though we've done everything correctly on time. But it gets really tougher and tougher. So you want to have that conversation with your advisor October, November, every single year. You want to meet January, February. That's what we do with our clients to get that plan updated. We want to make sure your 10-year forecast in the blueprint is updated and you know exactly where you're going. What's your taxable income? What is actually your Social Security benefit that's taxed? Are there Roth IRA conversions options? And then last but not least, right now we also look at older annuities because interest rates have increased so dramatically, and flat and level payouts are no longer acceptable. You've got to have annuity payouts now that are there for your life. And we go from there.
Gosh, so much goes into this. I feel like we've just scraped the skin of the surface, if you will. But goodness, so much goes into building these comprehensive, holistic plans. So remind folks how they can connect with you and what they're going to expect when they do so.
So you can give us a call, or you can always take a snapshot of that QR code and connect with us. The call, please, when you call, make sure that you're accessible when you would like to talk with us. We have so many people right now asking for our help, and once in a while we get someone who just doesn't answer. And it's just a shame for those people that we can't then service that really need that help. So please, when you make that call, make sure that you're going to be available at that time. You will actually be connected directly to me.
Wonderful. Jörg, Jim, thank you so much. Thanks for joining us. We'll see you next time here on the Swiss Money Solution.